Well, hello everybody, and welcome to this episode of Fantastic Female Fridays. My name is Susan Hayes Cullerton, and I am delighted to be here with you today for this session where we're going to talk about how to invest in a sector, and specifically, we're going to put the spotlight on retail. Well, as I say, my name is Susan, and I'm really delighted to be here with you all today for Fantastic Female Fridays. I really do enjoy the show. I love talking to you, and I certainly love hearing where you're all tuning in from, and hopefully what we can all learn with each other today. So, first of all, like we do every time, please do chat in where you're tuning in from, and let's get comfortable for our episode where we're going to focus on a very festive theme today, which, as I say, is focusing all around retail. Now, couple of things that I've heard from people over the past couple of months, and that I definitely want to make sure that I focus on with you today. Number one is, if you are tuning in from a mobile, then let me just go over here now to where I can show you. Then what you can do is, if you want to see the chat, is just underneath, because my own phone is up here on YouTube, so I can make sure that I can see what you're seeing, is if you click on live chat. So just underneath the video, click on live chat, and I'm just doing it there now, and in there you will be able to chat in where you're tuning in from. I see VectorVest has started off saying their hashtag VVNation, so please do. I see Adrian is tuning in today from Toronto, Jeff tuning in today from the UK, and yes, that's exactly what you need to do. So for anybody who is tuning in today on a mobile, please do click there on the live chat, and it would be really great to hear and interact with you, as well as, of course, everybody else. Now, in case you haven't been on this show before, let me tell you what it's all about. Fantastic Female Fridays brings a different approach to investing. Naturally, as the name suggests, is what I want to do is to make investing more approachable for women. And I really tried to figure out what's the difference. What is the difference between a male and a female investor? And if you go back to the very first of our episodes, I talk about that. I talk about different trading behavior. I speak about different behavioral finance. I talk about differences in terms of returns and so on. But actually, there is one other thing. There is one other thing, and I think this is the crux of the matter, is that we need to enable people to not just have the tools and the knowledge. VectorVest is amazing at doing that. And this show is sponsored, of course, by VectorVest. It is amazing at giving people the tools and the techniques and the knowledge and every single possible thing that you might need. Where I wanted to bring something extra to the table is I also want to give you more confidence. I want to be able to build your confidence as you move into the markets. And that is what I think an awful lot of women actually lack. And of course, I say this as a woman myself, I know, but I also say this as somebody that has written a book called The Savvy Woman's Guide to Financial Freedom. I'm also been working with VectorVest now for almost 10 years. It'll be 10 years next year. And therefore, I've met a lot of people over the years who have said, yeah, I'd love to do something like this, but I just don't have the confidence, or I'm not sure. And that is what I wanted to bring to this show. Now, I can also see here, Ted is here from Ocala, Florida, gorgeous part of the world. Ben from Maryland. Oh, hello there, Ben. I was in Maryland for the first time, I would say it was around about 18 months ago. Again, gorgeous part of the world as well. Larita, you're tuning in today from California. Wonderful. You're super welcome to each and every one of you. You truly are very, very welcome indeed. And can I ask you to please put in your comments, chat in your comments as they're coming along. I'm only delighted to see them. Anytime that I'm looking around, by the way, I'm looking at my different screens here to make sure that I know what you're asking and how I can help. Ursula says hello from Vancouver. You're most welcome, Ursula. And also, as I say, everyone that's here, you're super welcome. In addition, guys, I'd really appreciate if you would you mind just liking this video as well? I'd really love that, because of course, what I need to know as we move and progress and grow the show is what you like. So if you like what we're going to talk about today, I'd really appreciate if you would like and comment, of course. And if you're not tuning in live, that's completely fine. Chat in a comment. We'll always get back to you. We love our interaction. Pretty is here from Pittsburgh. Fantastic. I see Daniel is here from, let me see, is Vaxart Good Investment? Okay. And that is precisely what, the show is going to be all about. Today is going to be asking all about what to invest in, Somebody else, Earl asked me, am I Irish? Absolutely. Yes, I am. No, I'm definitely for sure. I am definitely Irish. Right. So keep the chat coming there. We're delighted to have you. And now, first of all, what I'm going to do is I'm just going to take you through a couple of things that have happened this year in the retail sector. And when we understand these trends, it will help us to understand where do we need to look then for our various different opportunities, right? So what does it take for a habit to stick? It takes two things. It takes routine and it takes reward. And the reason I'm talking about this is what has changed in our shopping habits throughout the year. Well, let's just think about both sides of these things here. What is it about retail that might have changed in terms of your routine? Well, number one, of course, if I have to say it, lots and lots of us are now shopping online, whereas previously we weren't. Or lots and lots of us are shopping online now where we might have done so in the past, but not to the same extent. And what has been the reward of shopping online? Well, the reward, of course, is the convenience, is that we don't have to go through traffic. We don't have to walk through very big stores. We can just get exactly to what we want. And of course, the other thing too is that if we want to compare with what's going on in other retail stores, it's super simple to do it. Instead of one website, I look at another website. In fact, I can also look at price comparison websites as well. Also, I'm not dependent on what time the store opens or closes. I don't have to wait in a queue for a till and so on. They're all the rewards. So therefore, I'm sure that it's not going to surprise you when I say, well, online has really, really grown this year. I'm going to give you some statistics for it, and I'm going to look right around the world in doing so. But certainly online has grown and grown considerably. And it's embedded in our routine now. I have to tell you that I have done much of my Christmas shopping this year online, super simply. And also I was able to do that in terms of thinking, that would be a good idea. Let me look it up. Let me buy it. So therefore the impulse buying that we're talking about, despite the fact I knew exactly what I was doing, and I'm not personally, I love food shopping, not a great clothes shopper, and I'd love to be a better present shopper. But the point is that in terms of taking an idea to purchase is now very, very quick. What else has changed in our routine? Well, something else that's happened, of course, and again, this is where I'd love to hear your thoughts on all of this too, is when it comes from the point of view of sustainability, when it comes to shopping local, that's been a massive increase. And I can see there's lots of people here who are talking about lots of people here who are still talking about me being from Ireland. Yep, definitely still from Ireland there. Another thing that I have to say is that happened, I saw, is that there's been a 540% increase in the searches, the Google searches for Shop Local Ireland, for example. People want to shop local. They want to be able to buy from local providers. They want to buy artisan. They want to do a range of things like that. And that now has become easier to do because through Twitter hashtags. As many of you know who are regulars in this show, is that we have a Twinterview every week before the show starts. So to give you an insight into what I'm going to be talking about, all I need to do is simply go onto Twitter and look for the hashtag shop local and put in my area, my country, and I'm going to get loads of suppliers then that I can shop local in. An interesting, I see a lot of you there talking about various different stocks I'll happily analyze them for you, absolutely. And I also saw that we have a couple of people here as well who are trading options. I'm a real options woman at heart, so I'll happily take a look at that for you as well. But what I will tell you is that what was I going to tell you? Sorry, I got excited there when I saw the options there in the chat. That what I'm going to come back to this. Oh yes, sorry. I'll tell you what I did see is that I saw a piece on the FT this week, the Financial Times in the UK, that there is an expectation that ESG investing, environmental, social and governance investing, could actually outperform in terms of money. So not in terms of returns, but in terms of inflows. It could actually overtake traditional investing in the next couple of years. So that is also something that is feeding into the way in which we shop, but also the way in which we invest. And I don't know whether many of you invest in ETFs, but I was looking at exchange traded funds. I was looking at some exchange traded funds data this week from the iShares website, and I noticed far more of a focus now is on sustainability factors and so on like that. So when it comes to habits, this is what I'm trying to say to you is when we're trying to determine, okay, what's different, what's changed, and is it going to stay? Remember, this is what it takes a habit to stick. Is it routine or is it reward? Okay. So Campbell here says, having changed to shopping online, it's unlikely I'll ever go back to high street shopping. There you go. You see, that's what we're talking about, habit and routine there. Shalish says, like my shades, yeah, I'm always wearing them. If you look at any episode of the show, you'll see that. And Kevin there just said, just grab some XLE calls. Great stuff. Okay, we're going to have a chat about that. So these were a couple of the things that I was tweeting about earlier on. For example, in April, the demand for online groceries more than doubled in Italy. In the UK, Tesco's online grocery business went up to 16% of total country sales in the first quarter, from about 9%, and Ocado retail web traffic up to 100 times higher than pre-pandemic levels. Now what I need to do is I need to move my camera there. Okay, well that's not going to do that. Okay, and then also another couple of things for you is that when we actually look at Black Friday and Cyber Monday, consumers spent $9 billion in the web. That was just on the web the day after Thanksgiving. That's up over a fifth than last year. And also Cyber Monday 2020 is expected to become the biggest digital sales day in US history, and all that points to online shopping in the US. So what do I think is going to stick? What are the key things, the key economic indicators that we think might actually stick? And then what I'm going to do is going to put these to the test over here on VectorVest. I'm going to show you how to do that, and that is, here is what I believe the future holds. So again, let me go back there. Let me go back. And I'm just going to move my camera there so you can see everything. Okay, there we go. So first of all, I think we're definitely looking at increased retail shopping or increased online shopping. Secondly, a serious focus on healthy and sustainable. But I also think we're looking at price sensitivity. I do think we are looking at price sensitivity. Governments can't keep printing money forever. And there's a great industry in VectorVest, in the industry viewer, which is all around discount retail. That's particularly one to watch. It's actually one of the stocks in there I invested in after Steve, Glenn and I did the Hot Stocks panel in October. I don't know if any of you were there at the time, but I picked 3 stocks myself, and to that person who told me that, to that person there who said that they were buying calls, so I sold a put on one of the stocks that I had mentioned back then, and I have to say it's a beautiful thing. It's a beautiful site. But there was one of the stocks that day that Steve Chappell spoke about within the discount sector, within the discount industry in VectorVest, that I want to take you through. And the last thing for sure is increased importance of purpose. That's why when you are looking at what's going on right now with ESG investing and so on, increased importance of purpose also really, really matters. Okay, so going to take a quick look back at your comments, and then let's move on over here and let's get into the program. Now, what I'm going to do for a start is something else that people have been telling me is that it's really hard to see that. It's far too small on the screen. So can I now tell you how to change the way in which things appear on your screen? I'm going to take you through that so that you personally know how to do it as well. Okay. Now, so as I'm doing that, I'm just going to check over here. Mary from Illinois is here. Wonderful. I see Julian is here from Durban, South Africa. Oh, you're very welcome. Hello, Maria. Hello from Maine. I see Salvatore there from Buffalo. I see Ernst is in love. Right, well, you know what my husband will have to say about that now, Ernst. Also, I can see here Salvatore says eBay, Overstock, Amazon. Maria says hi. Oh, Lisa, hello, and how are you? Lisa is she's been a long time fan of this show, even though we're still pretty new. J1 Film says, how long is this? We're going to be here for an hour. J1, I tried starting off this show doing half an hour, and there was so much to talk about. We've actually we increased it now to an hour. Okay, so back over here now. So to those of you who are familiar with the VectorVest system, what I want to do is I want to change the layout of this so that it's easier to read in terms of bigger font. Okay, so what you need to do first of all is I'm just going to move my mouse over here so that I'm in the right spot. Okay, so I'm going to right click and I'm going to click on column settings. Okay, and that is not the, let me go back there again. So sorry, click on this, click on any line here, and I'm going to click layout. And here is the secret. Here is the secret, right? Because this can pass you by. So what pops up then is a box. Let me just go back over here to a box over here. Okay, and look what happens here is click here on the font. So I'm going to move the font up here, and I know it's still quite difficult to see, so don't worry, I'm going to sort that out. I'm going to click on, say, 28, click OK, and click OK. And now look what happens. There we go. Still can't read it though, can you? And that is because I need to do one more thing. Is if I click again on one of the list here, and I click auto fit all columns, boom, there we go. That's all I need to do. Okay, that's all that I need to do. Now, couple of ways to get into the retail sector in VectorVest, right? The first one is that you can go onto the sector viewer over here, and it's just going to wait there now for the data. We are, of course, live in the US. Right now, I've got real-time data going on, so obviously that's all happening. So if I go down here, and I scroll on down here to retail, retail, where are you? Have I missed it? Anyway, I can simply... Oh yeah, well, do you know what a very simple way of doing it is just if I move my sector into alphabetical order, and then I will, yeah, there we go, and there's retail. Right, and I can double click on that, and then it will bring me into the retail sector, and then what it'll do is it'll give me the fastest moving industries, and from there I can look at the high VST stocks, etc. So instead of doing that though, what I wanted to do was show you how you could simply take a look at all of the individual industries themselves first. So what I did was I went into Industry Viewer. Of course, as you know now, I've reshaped the font so that you can see that it's much higher. And what I'm going to do is I'm going to scroll on down there now to R is down here for retail. Now take a look in here at the various different industries. Leslie asks me, when will I be on the hot stocks panel again? Not sure, Leslie. I'm waiting for the invitation, but thank you for asking me. And therefore, let me just take a look here. So we've got supermarkets, we've got miscellaneous diversified, we have major chains. Obviously my VectorVest screen is over here, so that's why I'm turning my head there. We've got jewellery, home furnishings, food, drugstores, discount variety, department stores, consumer electric, computers. Let me see down here. We have building parts, auto parts, and apparel. Okay, so that is the way in which we can look at any individual industry. But of course, what we might want to do is we might say, okay, but which one is moving fastest? Which one is moving safest? Which one offers the most value, etc. So as I look over here, I can see really quickly that, take a look at this one. I can see that the RT of retail department stores, and of course you can't see that because I am now in your way. Let me move over. See that now? Yes, you can. Okay. Look over here. So look here at the RT here. This is the fastest moving industry of them right now. So as I look up here, I see RT, I can see jewelry is up to 1.4, home furnishings is up to 1.44, but retail department stores, that's really where it's at. And of course, then if I was to double click on this, it will bring me into the individual stocks that make up that. Oh, just going to close down all my windows there. That will bring that then will bring me into the list of stocks where I can see the stocks within that. So if you want to do that, if you want to actually move through the system, so where you can go from sector into industry, look at the fastest moving industries, or you can do it the way I've shown you, which is go into the industry itself, and then you can scroll on down, and then you can look at the individual industries that are in there, and then you can double click to go straight in and take a look at the stocks from there. Now, I also see that there's a range of you that have your own stocks here that we're going to take a look at. So let's do that. And that's of course the purpose of Fantastic Female Fridays, is I want to build your confidence in being able to engage with this, but also to understand how to navigate the world of investing and how we can do that. Okay, so I'm just going to go back up there. Salvatore mentions eBay, Overstock, Amazon. Salvatore also mentioned Shopify, right? So let's create a watch list and let's take a look at all of those first of all, and then I'm going to direct you to a few I've been watching myself. So here I'm going to go to Stock Viewer, okay? And as you can see, I've already made the change here so that this was going to be simple for you to look at. So what I'm going to do is I'm just going to go in here. Let's look at Shopify, for example. Okay. So I'm going to add Shopify, and I am also going to add Salvatore's other ones there. Overstock. Now, interesting. J1 Film says cheaper stocks, please. That's really simple to get. But I'm just going to stick to this right now. Let me see, Amazon, no surprise there. Going to add in here Etsy as well. Remember the whole idea of purpose, sustainability, shopping local. Okay, so going to put in here Etsy. Okay, and let's get one more. What other one? Anyone else want to suggest another one there? I think I have 4 there of Salvatore's. Anybody else? Let me just see there. Hello, John from the Irish Riviera of South Boston. Hello, and how are you? Yes, okay, so Campbell says, can't you just double click on the RT column? It will list from decreasing to increasing in ascending order. Yes, I can. The reason that I didn't there, Campbell, is that I had all of the sectors in there together. But you're absolutely right, you can do that. But since I had all of the industries were all in there together, then let me show you what would have happened if I had done that. Is because I was looking at the industry viewer, is if I did that, let me just show you now, right now. I'm just going to move that over. Let me move this, and I had clicked RT, then it would have changed, but now I'd have all of the various different industries in there. Now you see, so, and therefore that would have looked at the fastest moving ones. Now, Gilbert says TUP. Okay, back over here now. Oh, sorry. Let me go back over here, back to my stock viewer. Oh, okay, AMZN, Shopify. Going to put in here Shopify. Going to put in here, let's try your one out there, Gilbert. Let's try TUP. Okay, Tupperware. Let's put in Etsy, and Overstock. Yeah, Overstock as well. Okay, and Overstock. Beautiful. Right, now, so now that we're in there, let's take a look at all of these, and let's see how we might analyze the sector. Now, first of all, I'm going to ask you to look. So see where Amazon is up at the top? Now look slightly down the screen, literally to where my hand is now. Imagine that my hand is going to go right out over beside the right out there beside the industry. So here we've got eCommerce, for example. The point here is that when you click on a stock in VectorVest, at the bottom of the screen, then we have the industry that it's in. So what we can see here is that Amazon today, it's down, so far it's down 0.4%. If we click on Shopify is in the same industry. You can see that. See, it's in internet e-commerce. So Shopify, its price today is up 0.31%. Etsy, this is the one. It's the one I'm watching. I'm watching this because of the trends. Like, just remember, if I just pop over here now again for a second, look at the trends that I think we're seeing right now. Is increased online shopping. Etsy is there. Focus on healthy, sustainable. Etsy is there. Price sensitivity. Not so sure about that one, but an increased importance of purpose. Etsy is there again. Okay, so let me go back over here. So that one so far today is up 1.37%. Overstock down 0.22%, and TUP Tupperware so far down 2%. So if I was to take a look there at any one of these, I can compare them to the industry that they're in. But before I do that, it's interesting. Apart from Larry says, are you looking at snow? Let's just do that. Let's just add that one in there now as well, and let's work from there. Okay, let's work from there. So we'll just, okay, right. Now let's take it from the top, right? Let's just take Amazon for the moment. So many people, I find, so many people are talking about Amazon all the time. Lisa says, Etsy has commercials all night in my area. They're really pushing their name for the holidays. It's their time, Lisa. It is for sure. So when you look at Amazon, let's just see how we might consider analyzing this, right? So first of all, as you can see, I've changed my system so RS is right over there beside me. It's right over there beside the symbol. So I can see the RS here is at 1.36, same as Shopify. And what that means is that the stock here has got high consistency and predictability of financial performance. That's what we can see there. So consistency of earnings, predictability of dividends if they give them. And that is, any of you that are familiar with relative safety will know that is what prudent investors look for. Consistency and predictability of financial performance. It's always something that I look for. That's why I've moved it over there. So we can see in the case of Amazon and Shopify, they're pretty, they're pretty high RS stocks right now. Etsy is also quite high at 1.18. Overstock is at 1.15. Now Snowflake and Tupperware are below 1. That means they're below average safety. Personally, and I'm just going to go back up here to the person who told me that. Let me go back up here. Let me see who said. Yes, to Kevin. Kevin, who mentioned that he grabbed some XLE calls. Kevin, particularly in your case, and you'll notice that. You'll notice it right here, is that of all of these stocks, 1, 2, 3, 4, 5, 5 of them are optionable. Here's how I know, is the little X there beside the exchange. So I can see that they're all optionable. Now, of course, if you're going to sell or buy a put, sell or buy a call in the case of Amazon, you would be looking at $317,000 per option contract. Down here with something like Snowflake, you're looking at $38,900 in terms of a contract. And in Tupperware down here, you would be looking, sorry, and you can't do that with Snowflake anyway. And then down here then, we can also see that Tupperware is currently, if you were to sell or buy an option on that, you're looking at $3,627. Right now anyway, would be the amount of the contract size, depending on the strike price. So I see that quite a number of you there are talking about Snowflake because it's up 14% today. And yeah, interesting what you're saying about that there in the comments. Yeah, certainly is a lot going on there with that stock. Okay, so let's keep on going there now. In terms of Amazon, if I look over there at Amazon, what else have we got going on? Well, really in the context of value, it looks like Amazon still has room to go. If the RV is above 1, that means that the stock has long-term price appreciation potential that is above average of 1.2. Again though, ETC is higher than that. It's up higher at 1.43. So that's telling me that the relative value of that means that on a 1 to 3 year basis is that it has got long-term price appreciation potential. The RT here, and of course I'm going to get back up here to Snowflake on that point, but the RT here is telling me that the buyers are winning the war. This is always the way that I always look at RT, is that I look at, okay, number one, or first things first, are we looking at the price going up or down, right? And above 1 is favorable, below 1 is unfavorable. So if it's above 1, which it is in this case, ETC is telling me, right, that the stock is rising. It's rising. Now I can also see in the case of Tupperware that I can see in this case that it's also rising. I can see in the case of Snowflake it's rising. I can see in the case of Shopify. Amazon, below 1 for a start, which is telling me it's either flat, falling, or else it's starting, or maybe not starting, but it's not rising as much. This is without looking at the graph. We look at the graph as well, but this is without looking at the graph. On the other hand, what we can see here is that there's huge momentum in Snowflake. Huge momentum right now. Obviously there is. There's a big red flashing sign beside this now, which we'll talk about. But I would expect the RT, of course, to be very, very high when I look over here and I see that the share price is up. So, well, it's after falling back a little bit there now since we looked at it last. But you would expect that. While I'm here now, guys, can I tell you one thing? Another stock that I mentioned, not at the last time that I spoke on the Hot Stocks panel, but I was on Glenn's Trending Thursdays. I sold a put to buy the highest VST stock in VectorVest Europe. And of course, you all know now that you all have access to all of the markets, which means you can look at stocks in Australia or in Canada. My own Europe, I don't own it all, but you can look at them all over. UK, the US, Canada. Where am I missing? Australia. So I sold a put on the top VST stock in the database. That's it. Top VST stock. Found it was optionable. I liked a lot of things about it. And then it was ASM. ASM. Now, not this is not the, often people confuse this with the gold or silver miner, right? It's not that one. It's a semiconductor company in the Netherlands. Anyway, sold a put on it. It expired worthless. I kept my money. Happy. Then I sold another put. It expired in the money. The stock was put to me. Stock fell. Stock fell in price, which, wasn't great. Then the stock has now rebounded past the strike price that I ended up buying it at, significantly past it. And now it is the RT has really jumped up and it's now edging its way back up to the top 10 VST stocks again. So it's interesting. I was talking I talk to people in VectorVest every day, but I was speaking to somebody in VectorVest today, and I just made the point in that if you simply look at RV, RS, RT, and VST, simply look at that, you can really and truly, if you really understand it, if you really understand what it's all about, really understand what it's all about, and if you understand and are confident and comfortable in the language of how all of those work, that is what's really important, because then you can truly understand what you're doing and how you're doing it. Also, I spoke about this last time. In the last episode of How to Talk to Your Partner About Money, I showed you how to create a portfolio on Google Sheets as well. And I said that it's super important to document why you picked a certain stock. And I'm going to remind you of that today. It's something, do any of you remember Kevin Crowe? I don't know if any of you were part of VectorVest when Kevin Crowe was here. And it's something he taught me. He said, always document the reason that you're buying a share, because when things go crazy, that is a time at which really and truly you need to remind yourself, well, why did I buy in the first place? Anyway, let's move on here, because I want to continue here on this point about RV. So RV, long-term price appreciation potential, it's top of all of them so far. And if I was to rank, let's say here, I see options queen, top of the morning, Susan. Are you going to get a replay of this? Absolutely. It'll be right here on YouTube for you. And we'll also, again, guys, anybody that wants to get the email afterwards with the resources and with the link to the next one and so on like that, if you register at vectorvest.com/FFF, it just means you're on the mailing list and you're reminded of everything. Can I ask one of the fabulous people at VectorVest on the production team to maybe just put that link in the chat? So vectorvest.com/FFF. Again, to anybody who's just joined us, if you're joining from a mobile, or mobile, as Joey says, I call it mobile, he calls it mobile. We're talking about the same thing. Is underneath the video, you'll see the term top chat, live chat. Click on that, and that's where you'll see all of the conversations happening there. Okay, now, so if I am to rank here, I'm going to rank my list of stocks here by RV. You can see that. Thanks, guys. Thanks a million. You can see there that EC now comes to the top because it is the stock with the most value opportunity. I don't think you need me to do this again for RT, do you? Because obviously Snowflake is gonna be the one. It's going to be the one that's rising the most. And then if I click over here, look at VST. Which is the top VST stock? Interesting. EC again. Remember, right? One last time, right? One last time. These are the 4 trends that are driving retail in the future: is increased online, focus on healthy and sustainable, price sensitivity, and increased importance of purpose. Just as I say, just to remember that point. Okay, let's go beyond that now, right? Let's look at other things. So any of you that knows me, and a lot of you do now from being on the show, you know exactly the type of investor that I am. You know that what I look for is, I like my income. So I like looking for a stock that has dividend and substantial and solid and safe dividend yields. We had a whole episode on dividends a little while ago, so we're going to check that out. But also, my favorite VectorVest indicator is VST. My second favorite is CI, Comfort Index. And let me go over here now. So if I go over to CI and I see Lisa, good woman, I can see Lisa has picked this up as well, is that our retail sector analysis here, the CIs are all very, very good. Very good, very nice. When we look at the best CIs, now because I have a bigger font, it now means that it's you know, to fit all the information in can be a little bit harder, okay? So here you can see that Shopify actually has the highest CI. I can see that Etsy has the next highest CI. Now they're very, very healthy at 1.7. Anything above 1.3 is very good. Anything above 1.5 is very, very good. Anything above 1.7 is excellent. So we can see here Shopify, Etsy, both of those have CIs above 1 for a start. They all actually have CIs above 1, but above 1.7. Then we have Snowflake at 1.6, Amazon at 1.56, Tupperware, and Overstock. But here is where the cookie is going to crumble. Right here. Right here is what is the growth of the earnings. And Shopify and Etsy have phenomenal growth here of 33% and 34%. Etsy again is topping the table there. And then we have Amazon at 24. And then we have Overstock at 20. But Tupperware is at a negative value. in terms of this. And also then we have Snowflake, which is just at 4%. So when we do get over here to our dividend yield, you'll see that actually we haven't got a whole lot going on. Haven't got a whole lot going on here. And here is where, if I may, I am going to add in another stock to you. And this is the one that Steve Chappell spoke about during his hot stocks panel. Guys, back to the VectorVest people again. Would it be okay? Can I just ask you, will you paste the link to the hot stocks panel discussion that the three of us had, Glenn, Steve and I, back in October? Would you mind just getting the link from YouTube and popping it there into the chat, just in case anybody wants to get the full reference of what I'm talking about here? So Steve presented a stock. I went on and I bought it, which was this one, Dollar General. Different sort of area now. This time we're looking at something different here, right? So if I look over here, look at Dollar General here in this case. So Dollar General this time was about discount and variety. Again, one more time. I said that the last time, but I think I mean it this time. This is where we've got price sensitivity all wrapped up. Price sensitivity, when we talk about price sensitivity, what we mean there is we don't know what's going to happen with the economy. As I mentioned, governments can keep bailing out businesses and people and countries and so on like that. What sort of an economy are we facing? Now, the stock market is feeling good, and the stock market, of course, is very future focused, but we don't know what will happen, say, for example, the future of hospitality. Thanks, guys. Thanks. I think it's Joy. I think Joy might be doing that. Maybe it's Jen. Maybe it's somebody else, but whichever one of you, thanks a million. So if you want the full background on Steve's idea around Dollar General and my own three, as I mentioned in particular, there's one in there that has been doing me very, very nicely since then. You'll be able to follow it all back then. Now, price sensitivity then means that if people are going to become more price conscious, where are they going to go? And where they go is they go from a luxury shop down into a middle of the road shop, and of course then they can fall further. Dollar General was a store that just did, I looked into the background research on it. Again, you'll see me having done that on the Hot Stocks panel. And when you actually look into the number of in-store visits, when you look at the amount people were spending in store, when you were looking at the amount being spent online, when you're looking at the amount of that more people, because they were spending more time at home and then were spending more time cooking at home and baking at home and so on like that. Certainly in Ireland, I can tell you, the thing that was at pretty much a premium back when we were really in the height of lockdown was flour. People just wanted to be baking their own bread and provenance and, figuring out how to do these things together, and this, the old style smells of baking in the room and so on like that. It was flour. Dollar General was looking at the benefits of all of that. However, when I looked at it, and when we're on the Hot Stocks panel, by the way, guys, or if you look at any of the shows of VectorVest, but certainly when I was on the Hot Stocks panel anyway, is that we have to do this on the go. We really and truly have to do it on the go. I didn't have 2 days to think about, well, I wonder what the two guys are going to talk about. This has to be done on the go. And this is where, again, in terms of building your confidence, this is what matters, is to be able to know what you're looking for, when you're looking for it, how do you find it, and then how do you make a decision on it. So far, what I've shown you is, okay, let's first of all look at the value, the safety, and the timing. Let's look at those three things first. Is the stock moving up, down, or sideways? And with what sort of momentum? That's what RT is about. Are the earnings consistent and predictable? And it's interesting, again, lots and lots of you having the chats here all about how you feel that these individual stocks are going to go, and you're all absolutely entitled to your view. And then we also need to look at value. Is there good long-term price appreciation potential? Right, let's start there, because then you've got a good grounding. You've got a good grounding in the way in which the stock might be valued, in the way in which it's moving, and whether it's safe from the point of view of predictable and consistent earnings. But then I suggest that you move on and look at a couple of other things. I could talk to you for another half an hour about the comfort index. As I mentioned, that's my second favorite indicator. I'm not going to do so tonight. You know why? Or today, going back to the person in California, it's still breakfast time. I'm not going to do so today because I do so pretty much every second episode. So all I'm just going to say is the comfort index is my second favorite indicator. And definitely we talk about that in lots more episodes. But I always would look at the earnings, and I always look at the dividends. And when you look at the earnings in the case of the list that we looked at, there's some really great earnings there. and also earnings growth rates for sure. But I also particularly like to look at the dividends. And that's what I liked about Steve's pick that time, is we didn't just have a stock that was focused on some of these things. Dollar General focused on some of these things, but it also had a dividend, which is what I like to see. So let's take a look at what that is then. So the dividend here was at $1.44, and the dividend yield then was at 0.68. Now, I generally like to find my dividends at least above 3%. You may say, what? How easy is that? You'd be surprised when you look for them. When you actually look for them. And they're there. They certainly are there. And my top stock that I picked on that night, well, one of my three that I picked on the Hot Stocks panel, it had the highest dividend yield of all three of us, but I always look for them, and the guys know I look for them. And also, I look for dividends even if they're not there. How do I do that? Anyone want to chat? I look for dividends even when they're not there. Just going to see now if anyone knows anybody knows what I mean. So let me see. Campbell says EPS is king for sure. Raman puts in a range of views there about a variety of different things. So income statement, says Leslie. Yeah, certainly I can look there. I can look there to see if it's there. What I will also tell you is if you sell a put option before you actually go on to buy the stock, or by buying the stock, or you get paid to buy the stock, that's how I create my own dividends. Now, John, covered calls. I have to say, I've an interesting relationship with covered calls, because ASM, right? You know what, John? You know what? Let's pop over there. Oh, this is John from the Irish Riviera. Very good. Let's pop over there, and I'm just going to show you exactly what I mean about covered calls on this, right? Again, let me show you how to do this super quickly, how I'm going to increase the size of the font. I'm going to increase the size of the font here by layout, and then I am going to change my font here. Going to put it up to 28. Stick with me there now, guys, and I'm going to show you exactly about my interesting relationship with covered calls. I'm going to right click. This is the European system. Of course, you all have access to this now. A lot of really interesting stocks here too. Now, ASM, if you come down here, here it is. This is the one. Now, actually, you know what I'm going to do? I'm going to go into the graph instead. ASM.as. ASM.as. Okay. So, you can see here, I hope you can see, I know at the moment my picture is in the way, but I'm going to make sure that what you need to see here is relevant. So the VST of this stock, this was top of the pops, right back in June, when's that? June? And I was on Trending Thursdays one day, and I spoke to Glenn about this, and I said this was the top VST stock. He asked me for one in Europe that I was watching, so I said I was watching this. At that stage, I had a put that had expired worthless, and then as you can see here, then I sold another one, right? Sold another one pretty high, then the stock fell, the stock was put to me. I ended up buying the stock at 145 euros. That was the strike price. 145 euros is just about slightly higher. Anyway, in here, it's lower than that. So today it closed at 154.90 and making a new high. The thing is, John, I'm not going to sell a covered call on that. And I spoke about this. I really spoke to my audience last weekend, because I do the Q&A webinars once a month for Europe. We also have a fantastic guy in Belgium called Tom. He does them once a month. And then we have another super guy called Danny. He does them in Dutch twice a month as well. So we have a lot going on in Europe in the different languages. But I spoke about this, John, and I spoke about it because I said, here is an example. I sold 2 puts. Great. Happy. I got my income there. Dividend or no dividend, I got it anyway. By the way, there is a dividend. At the moment, it's at the dividend yield right now is at just under 1%, right? So, there is a dividend there. It's okay. It's okay. But it's anyway, so I have that as well. But why would I sell a covered call in this? I have to say, I'd simply be selling the upside. Like, look at that. It's the upside there. It's just looking beautiful at the moment. In fact, if you move me over, right, I'm just going to move myself over there. Okay, I'm just going to move me over. Oh no, that makes me do other things. Anyway, look over here. Is that you see here my RT? My RT is rising there, and if the RT is rising, like it's just not a good time to be selling cover calls. I'm quite happy to hold the stock, get the gain, and then when I see different sorts of activity, then I'll be considering selling my cover call instead. So, but the point that you're making there, John, is right though, and that is all about the idea of using options in order to create your income. John says, so you sold a put and kept it to expiration to get exercise that take it. Yes, that's exactly what I did. The first time I did it as well, and it expired out of the money. That was fine. As I say, I told the group that day at Trending Thursdays, I said, right, I'm going again. And then after that, I then went on and I sold another one, and it was put to me, and I have the stock today. Quite happily. And it's now moving its way right up the VST table again. So happy days. Now, let me go back over here then. Let me go back over then to the US. So back over here to Dollar General. So when I see a dividend here of 0.68, you know, it was okay. You know, it was okay. It was better than all of the others that I was seeing at the time, which was round about zero. But the interesting thing about dividends, and as I say, if you're interested in dividends, please do check out. I'm going to go back again to my fabulous team in the US. Guys, can I just ask, would you mind sharing the episode around a safe, solid and sustainable income, please? If you just post that into the chat, that would be great. Please do. Who asked me this? Parahouse says, how many days till expiration of the puts you sell? Now, I have a calculator that I use in order to figure out the best form of time value, but I generally might look at round about a quarter. I don't sell the front month when it comes to puts. I'm okay with taking some time value. I'm okay with letting time elapse. And I absolutely had some puts that I had to expire in November, December, so that the volatility around the election was going to feed into basically paying me a premium to buy stocks that I was happy to buy anyway. Now, in the case here then, I'm just going to continue here with Dollar General. In this case, I was looking here at the dividend yield, as I mentioned, of 0.68, but I mean, everything Steve said about the stock. Growth rate here of 22. CI here again, Lisa, 1.37, looking good. VST was at 1.32. Look at the RV though. Like the RV was 1.56. I mean, you know, much higher than anything else here that's on the list. Absolutely ties in there into price sensitivity. Massive company. Huge company that can enable. Thanks a million. So the episode now in the chat there, again, anybody that's on a mobile device, if you click on live chat, you'll see. Anybody who's watching this is recording, if you click on live chat as well, you'll see the conversation as it's happening. So in this case here, as you can see, the RV really strong at 1.56, and look at the PE ratio. Like, look at this beautiful little PE ratio, 22 times. 22 times. By the way, my own Dutch semiconductor ASM that I looked at as well, the PE ratio is around about that. I personally don't like very high PE stocks. It's not something that I look for. That's why something like this makes me come out in hives. And the fact that it's negative, like the two of them, it makes it. So that's why I like my earnings per share to be, you know, rising at a gentle pace. I also like for the PE ratio not to be extortionate. And I also like to look at a stock's own PE history, because really stocks will only rise for two reasons. Number one is because they earn more, and number two is because people are willing to pay more for those earnings. In other words, earnings per share and PE ratio, they are the reasons that shares go up and of course go down. Now, in addition, I remember today was all about looking at the retail sector. So what I also want to enable you to do is, when you are looking at any stock, and sorry, Campbell says Mobil is an oil company. You know what? I like that, Campbell. I'm going to say that to Joey next time. We were doing our tech check today, and I said, I really want to make sure that I can see what everyone can see today on the mobile. And he said, oh, you mean on mobile? And I said, yeah, on the mobile. He said, you mean like on mobile? So yeah, Campbell, you get where I'm coming from there, definitely. And thank you for that. So by the way, guys, we have 11 minutes for the rest of the episode. So please do get your comments, get your questions in here. I'm only delighted to answer them for you. Okay, now if I keep on coming down, then VectorVest itself is saying lol now. That's good. So here's what I want to do is I want to show you how to compare to the average of the industry, right? So just going to move me out of the way here. I'm kind of in the way here a little bit today, aren't I? Still no, though. I like being able to see you. You know what I mean? Kind of. Okay. So now what I'm going to do is I'm just going to click here. Let's say I'm going to go back, let's say, to Etsy, and then I'm going to look at Dollar General. Lorena says, these are stocks for swing trade. Well, the way in which I am an investor, Lorena, is I generally like to find stocks that I'm happy to buy and thus happy to hold. Like that really is what my focus always is. And then I like to find my stocks where I've got, my relatively low PE ratios. I like to find my high CI stocks. Always. I always look for a good solid RS. I look to RT. I know what I'm looking for. And by the way, guys, again, going back to the whole concept that I have around this show of building your confidence is it's okay not to know who you are yet in the market. Give it time. But realize that it's really important that you get to know. Some of you may completely disagree with some things that I'm saying, and that's helpful for you. Or you may agree with me as well. It's not really about whether I'm right or whether I'm wrong, because this is quite subjective. The whole point here is an understanding of who you are. I'm somebody that likes looking for income. I'm somebody that likes thus looking for my dividends. I'm totally comfortable with options. I'm totally okay with missing out on a stock that rockets, that doesn't have a dividend, that has a massive high P ratio. I'm okay with that. Lots of stocks over the years have passed me by and sailed on up. And you know what? I'm totally okay with that, because I'm totally okay with going to bed at night knowing that the stocks that I'm buying are solid quality stocks where I really feel that if I'm using options, I'm able to tweak them for income. And they're out there, producing quarter over quarter, year over year, that they're producing earnings and naturally dividends. Sometimes I do things very differently. And I'll tell you about those over the course of the show. I haven't time to tell you everything tonight, but sometimes I'll do things that are quite different, but I'll know why. And that's key. But if you don't know everything, take your time. Just get used to one thing at a time. Maybe it's dividends tonight. Maybe it's just getting used to dividends and you say, you know what I'm going to do? I'm going to watch the other episode focusing on dividends so that I can really understand that, really get to grips with it. Maybe it is that you're going to say, well, I'm going to do my own sector analysis and I'm going to look at my own, I'm going to read some reports. Like I've been tweeting the reports that I've been reading about the retail sector. Maybe, and by the way, again, they will all be on the follow-up email, the reports that I read. Maybe you're just going to read those and just get used to that conversation. Maybe you're going to say, right, I'm definitely going to be back in 2 weeks' time. We've got a really different episode for you again in 2 weeks' time. And I'm going to commit to watching this show every 2 weeks so I can build my knowledge, and I'm going to participate. I'm going to ask questions. I'm going to be part of this community. All of those things are the way in which you can build your confidence. Now, let me see over here. Do I have any UK retail shares to recommend? Stu, I have had a couple of some really great stocks in the UK that I haven't time to analyze fully for you, but let's talk about that absolutely again another time. Campbell says swipe your picture to bottom left hand side if possible. Yeah, let me see now. I could, but actually that would cause a different problem, Campbell. So I might, I'll do something else. Lorena says, do you guys have a show like this for swing trade as well as options as well? Now, what I will say, Lorena, is the Summit has a section all the time on swing trading. So the next time that you see that happening, or else you can go look at previous episodes. Are stock graphs important to your stock selection? Stan, absolutely there. Absolutely there. It's really important, because what I find about Viewer is it's great. It's a great way of being able to look at a whole lot of information, but it's all based on right now. Remember I told you I like to go back and I like to look at the PE ratio of a stock and compare it against its history. That's how I made the decision not to sell a covered call on my ASM stock, was because I could see where the RT was going. Absolutely, I look at graphs all the time. Let me see. Lisa says, every tidbit is helpful. I have so much more confidence with your guidance and education. Isn't Lisa just wonderful? She really is. Thanks, Lisa. Women learn differently than men. No disrespect to them, but we're wired differently. And that's what I want to be here, is to enable people to learn at whatever pace you want. But just to understand, guys, the entry ticket to this show is not knowledge. I'm not expecting you to know anything. And also, you could have been a VectorVest subscriber for 100 years or 25 years. And I want to be able to show you something new as well. Let me see. Niall says, will you cover ETFs and how to buy confidently? Do you know what, Niall? I'm going to do a whole other show on that. Thank you for inspiring a new episode. I will absolutely do that. Yes, I will do that for sure. I will do that for sure. Christian says, forum comments. I'm not 100% sure what you mean there, Christian, but please do pop in here. X-Ray says, first time here, do you have a website of your own where you share your research? It's on the blog. It's on the VectorVest.com blog. If any of you register for VectorVest.com/FFF, you'll get the follow up email, and therefore you will get the research that's there. It's all there on the blog already. Okay, I'm gonna get in here now, and let's do a rapid fire learning session before we go. Okay, number one, when it comes to Dollar General, and I'm looking here at the stocks RV, let's just do a industry analysis here. Okay, so I'm going to scroll over here. I'm going to scroll over here. Right now, look at this. Dollar General, the RV is at 1.56 of the stock, and then down here we've got RV at 0.98. So that's just telling you how much higher Dollar General's relative value is. Number two, RT. The RT in Dollar General is only okay, and it has been, it's been stuttering a little bit. Again, I didn't buy it for its speculative ability. I do other stocks for that from time to time and depending on the market. But in this case, it's only doing okay. That's why I like my dividends, and that's why I like selling my puts, particularly my puts, and getting in there. The RT still is better, certainly. Here the RT is lower than the sector in general. But what I want to show you was the RS. The RS is over here. The RS of Dollar General is at 1.4. The RS of the sector here is at the industry is at 0.91. So much higher RV, much higher RS, not as high RT. It is a stock really that suits the type of person that I am, which is that income focused, longer term investor. And also where I am conscious about where the trends of this are going in the future. So if I was to do another one, I'm just going to do, let's say, ETC, the one I've been talking about there a lot. So if I take a look at ETC, what am I going to do here? I want to make this easy for you to see. I'm going to click on company, and I am going to move my own picture a little bit up further. Okay, now, so you can't quite see my glasses. Is that okay? That's what they look like anyway. I always wear my glasses, always. Now, so ETC here, when we look at ETC, then we can see that the RS here is at 1.18. Let me just click on the stock. So let me scroll on over there now. So I can see the RS of the stock is at 1.18. Look at this, much higher than the RS of the industry. But also is if you take a look at the RV of the industry, it's at 0.64. Whereas the RV of ETC is at 1.43, significantly higher. When we look at RT, the RT of the industry is 1.05, and in this case we can see it's at 1.37. So a really big difference. The VST, significantly higher. So we can quite clearly see that ETC is at the top. By the way, am I saying ETC correctly, or do you say ETC? I say ETC as in like EAT, like eat Z. You might just tell me, how do you pronounce it? Am I saying it all wrong? Or am I getting away with it because I have an Irish accent? So that's okay. You might let me know. Right. If we go on then further, I can see that the growth rate of the industry here is at 7%. Again, in the case of ETC. I'm even laughing at myself now at how I said. It is, growth rate is at 34. It's almost 5 times. ETC. Okay. So let me see now, what else have we got going on? We've got the GP. Well, yeah, so we don't have a dividend, and that's typical really of the industry, but it's it's eCommerce. An awful lot of these organizations are reinvesting back in. It's not like your Dollar Generals where they are going to be offering I was going to say a discount. They don't offer a discount. They're this industry of the discount. They offer a dividend, small as it might be. Now, Julian adds in a very good point here. What about value versus price? So you know what? Let's head over and do that, because in the last couple of minutes that I have with you here today, I now also want to take you through the graph. So I'm going to put 2 graphs. I'm just going to do ETC and Etsy, and Dollar General. So let's pop over there. Let's move me out of the way here again. Two things, and this is one, and DG is the other. Okay, now what we're going to do is just going to move me around. Okay. Do you know what? Let's get rid of me for a while. I'll be back. I'm not going very far. I'm still here with you. Right, when we look here at this stock, we can see here that it's got a lovely movement from the bottom left to the top right, and that is what CI, the comfort index, is all about. You can see here it's had a buy recommendation for ages and ages and ages over the past year, and it jumped off its low price. Its low price over here was 33.03. That was its low price back in the 23rd of April, and it has increased. What's 156.06 divided by 30? Guys, can I ask the team there in the US, would you mind just working out from the lowest to today's price, what's been the percentage change? If I do it here, I just don't want to waste time doing it here myself. Would you mind, guys, just Joey, would you mind just working that out? What is the percentage change? Thanks a million. This production team, honest to God, they are just fantastic. So we can see here that the RT is rising, which is the reason that if I was to be looking at this stock, I would be quite happy with that. Now you can see here all of the things that I look at. They're all over here on the right hand side. So I can see here my relative safety is looking good, but in particular, let's see over here what the EPS is. EPS is earnings per share. There we go. There's your answer. There is your answer, because it's like the EPS has a high CI as well. In other words, the earnings per share are moving from the bottom left to the top right. But let's go back to Julian's question. Was it Julian? Yep. Julian then asks, what about value versus price? Let's do that. Let's put on the parameter of value and let's compare it to the price. Okay, and let me now turn off the CPS for a moment and let's turn off RT. Now, this is the challenge here in the case of Etsy, is that we can see that the value is rising. We can see that the value is rising, but it's much lower than the share price at the moment. The thing about this is when you're looking at value and price, people often feel that they're, what's the word I'm looking for? That it's like a price target, but it's not. And that's why we prefer to look at RV. Let's go up here. Let me just add the parameter here of RV. And in this case, what we like to see here is that this is what is a better way of looking at this. For sure, I often like to look, I'm just going to come back over there again. I kind of feel lonely there without seeing you all. Just move me down there. So the thing here is that I often do look at value versus price, and I get uncomfortable when the value and the price diverge too much. But what gives me a lot of comfort is when I see RV above 1 and significantly above 1. That's particularly what I like to see, and I'm interested in how this is happening here. But if you look at Dollar General, let's just look at it in the same way. Have I pulled it? No, I haven't pulled it down there. Okay, let's pull it down there. See, there we go. That is the opposite story. That is exactly the opposite story. And by the way, that night at the Hot Stocks panel, that was Steve's very point, is that look at the value here relative to the stock. And also, when we're looking at the RV, it's still also very, very high. That's the reason that, like, this kind of just suits me. This suits me as an investor, is to be able to do this. And that's why I said, you know what, yeah, I'm just gonna take it on. Now, the stock hasn't done a whole lot, but that's okay. I'm a pretty patient. I know an awful lot of women don't have patience, by the way. But when it comes to investing, I do know that I'm okay with waiting to see how this one is going to pan out. And remember, I'm being paid to wait because of my dividend as well. Small and all as it is, I'm still being paid to wait along the way. In addition, if we take a look at the earnings per share here, there you go. Look. There we go, is that you just have that lovely similar sort of a graph there as you do for Etsy, and that's the reason that I think it's particularly interesting. Now, can I take a look at CCL? Well, you know what, I will. I will, Michael. Do you know why? Is because I have been talking about Carnival. I trust that that's Carnival you're speaking about. I have been I spoke to you about that before. I spoke to you about it the night of the Hot Stocks panel. I spoke to you about it. Another episode that I to talk to you about as well that I had was the future of travel. And that was the precursor to me choosing Royal Caribbean as a stock. And that was the one that I put forward the night of Hot Stocks. Well, there was 3, but the night of Hot Stocks I put forward Royal Caribbean. And it's had a beautiful journey. Haha, did you get it? Beautiful journey. Travel? Okay. So that night, it was because of that fantastic Female Fridays episode where I could interview somebody in the trade, and I said, okay, you know what? Well, I think that actually the market has completely overreacted to this whole travel thing. Now, there's loads more questions coming in there, and I can't answer them all, but what I will just do there, Michael, is I'm just going to go and take a look there at CCL. Let me go up there to CCL. Up there to the top. No, that's not it. Come down. There we are. Carnival. Okay. So I'm just going to move me out of the way here again. So in the case of Carnival, as you can see there, RV has fallen way down. Yeah, it's fallen way down. Which like, look at what its earnings has done. I mean, the company doesn't have a way to earn. That doesn't surprise me. Doesn't surprise me at all. And of course, also its value is pretty much flatlined there. The value is flatlined. I mean, it was much higher, and the stock was doing fine naturally enough before COVID. So you can understand how that might have been the case. Now I'm going to go back over here. Just going to pop over to your comments. Okay, there's loads and loads going on there. Mobile, Etsy, all the same. Tomato there, Lisa. Yes, indeed. So I can see that there's loads of comments, and guys, I really appreciate your interaction. That is what makes this show what it's all about, and it's totally designed, as I say, let's build your confidence. Let's build your confidence around investing. That's what I'm here to do. The implication is not that you understand an awful lot coming to the show, but I want to help you to grow day by day, week by week, and episode by episode. Again, I would really appreciate if you would like if you like the video here on YouTube, if you found this to be useful. And we're going to be back again in 2 weeks' time, same time and the same place. After this, I'm going to do like I always do. What I am going to do is I'm going to pop over to Facebook. I'm going to pop over to Facebook, and I'm going to do a summary of what we've discussed here today. So that's going to be on Facebook Live. That's where I'm going to be heading over to next. So if any of you are on Facebook and you go onto the VectorVest Facebook page, that's where I'm going to be. I'm going to be there within minutes. And of course, you can pop in any of your comments along the way. Now, so yeah, talking about Carnival. Campbell, honestly, I have spoken about that before. I've written in my views all about that as well before, all about what I did with Carnival, and just a really interesting stock. Let me see who else is there. Is there... When am I going to do options? Yeah, that's another good idea. I'm definitely going to do that on another occasion as well. I can do it plenty, of course. The scope is endless for the show, and this is what it's really all about. So on that note, I'm going to say to each and every one of you, thank you for being here with me today. Truly enjoyed having you here. Loved all of the interaction. Thanks for putting up with me being moved all around the screen, but it's just, you know, when you've got graphs and you want to see everything, and also I want to see you too, then of course then you have to try to do logistically what you can. So really appreciate it, as I say. Again, in order to get the follow-up resources and to be told about the next set or the next series, the next episode, go to vectorvest.com/FFF. I'm just going to ask the guys again in VectorVest to please do just post that into the chat there so people can. It's simply a way that you'll get the resources, and then you'll also get the get details on the next show. Guys, thank you. Have a lovely weekend. Best wishes, and I'm going to see you all soon.